You are watching Market Watch, the brief overview of the key events from the world of finance. The report published on Tuesday on changes in consumer confidence in the United States was completely ignored by the market. Not only did the actual data turn out to be significantly lower than the forecast, but the previous value was revised downwards. This is a really bad signal for the world's largest economy. At the same time, it is important to understand that investors are looking not only at the value of this index itself, but also at its structure. It is noteworthy that in February, consumers were worried not so much about how much they pay for gasoline or food, but about recent headlines highlighting a surge in employee layoffs and increased attention to the upcoming presidential election. Thus, investors and traders are once again talking about their willingness to ignore secondary indicators, focusing on the key one, inflation. After all, the Federal Reserve monitors this index, making decisions on monetary policy. Recall that the Basic Price Index of personal consumption expenditures will be published on Thursday. An unexpectedly strong decrease in this indicator will once again make the issue of lowering the Fed's key interest rate relevant, which in turn is a strong bearish fundamental factor for the dollar, as well as bullish for the stock market and precious metals. And now let's turn to the oil market, because on Tuesday we saw explosive growth again, which is due to uncertainty. Firstly, the military conflict in the Middle East is still in an active phase, and despite the statements of the US president, there is no confidence in the rapid conclusion of a ceasefire agreement. Secondly, investors are waiting for the next decision from OPEC Plus to reduce production. And despite the fact that one should not expect a significant reduction in oil production by the cartel, demand remains stable. But at the same time, it is important to take into account the proximity of the price to a strong technical resistance level. Therefore, a strong bullish fundamental factor is needed for further growth. Let's also pay attention to the obvious optimism in the cryptocurrency market. Bitcoin broke above 57,000, while Ether came close to the $3,300 mark. This is the maximum value since April 2022, but there is still growth potential. Therefore, the bullish scenario remains a priority, which can be implemented provided there are no obvious sell-offs in the stock market. After all, with the advent of Bitcoin ETFs, the cryptocurrency market is highly dependent on stock market sentiment. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.